Good evening, ladies and gentlemen. You're watching Startup Central right here on ET Now with me, Sumita Kareer. If it's anything to do with technology, entrepreneurship, and the new economy, well, this is the show that you should be watching every Monday at 7 p.m. to keep a track of all the developments in the space, because we're telling you the story of the Indian startup ecosystem and the technology ecosystem like it needs to be told. In fact, we have a packed show lined up for you. We have a very special conversation also coming up. And then, of course, we'll be looking at how Karnataka and Andhra Pradesh are looking to ban social media for young teens. But is this a practical solution? We'll be looking at that story and a couple of more stories a little later on the show. But first up, let me tell you some developments that are happening in the D2C space. Well, it's the big trend in the D2C segment and startup space, which continues to reign supreme. I'm talking about FMCG brands acquiring or buying stake in D2C startups. We've seen it earlier as well, with HUL acquiring about 90.5% stake in Minimalist, Marico investing in Beardo and buying a majority stake in Just Herbs. Then there was Imami that acquired the Man Company. Estee Lauder, in fact, even invested in Forest Essentials. And now it's yet another story of a legacy brand acquiring a minority stake in a startup D2C company. Dabur has acquired a minority stake in RAS Beauty for 60 crores. In fact, just a couple of days back, Dabur also invested close to $10 million in the company. So when legacy consumer companies or goods giants, they start backing digital-first beauty brands, it often signals more than just a financial transaction. It reflects how the industry itself is evolving. To speak about that and much more, let's bring on board Shubhika Jain. She's the founder and CEO of the company. And Shubhika is joining us from Raipur, where she started the company. Thank you very much, Shubhika, for taking the time out. You have a big smile on your face. I believe that's all due to the news that's coming in, given the fact that Dabur has acquired a minority stake in your company. What does that essentially translate to RAS Beauty?
Yeah, so it's been a great news for us because Dabur, which is a company with a 141-year legacy in natural and Ayurvedic sort of skincare, has invested, and even Unilever Ventures, who had already invested in our company, doubles down on their investment. So this shows a strong vote of confidence for us, because at RAS, we've always believed in clean, farm-rooted luxury beauty, and that it deserves a serious place in the Indian market. And this partnership exactly signals that the larger industry is beginning to see that too. So for us, it's the right partner at the right moment.
Right partner at the right moment. That's essentially what you feel. But let's also ask you about the fundraise, the minority stake which has been bought in your company for 60 crores.
Sorry, I missed you. I couldn't hear you.
Shubhika, yes, I want to ask you about the 60 crores. That's essentially the value of the minority stake which has been acquired by Dabur in your company. How are you going to be deploying this capital? And will Dabur's role play beyond capital, product development, supply chain, or retail expansion?
Sure. So we've raised this Series B of 65 crores, and we would be kind of deploying this on product development, on expanding our omni-channel presence, and also building our team and supply chain. So with Dabur also there, we expect to get some sort of support in the distribution and also learning from their really experienced team in R&D also on how can we even develop better products along with them.
Right. Shubhika, the play when it comes to D2C is essentially about scale. It's important for D2C brands to reach critical mass. But how do you plan to balance luxury positioning with large-scale growth amidst heightened competition? And when it comes to your farm-to-face positioning, how do you plan to manage growth, especially given the fact that the kind of competition that we're seeing in the D2C space, that is intense, and also to be able to maintain that luxury positioning, that's going to be quite challenging.
No, that's an absolutely right question. And this always becomes a tricky one for us, because and for that, what we do is we always ensure that our pricing is right to the consumers. We launch products at the highest quality in which we have traceability of each ingredient. So our pricing is on the higher side so that we can maintain our gross margins. And we are looking at reducing our discounts over time, which we've been given, because if you know, D2C brands are they survive on being able to give some sort of discounts to customers. So that is one thing that we're cutting down. with an omni-channel presence by opening stores, like you mentioned, Forest Essentials, they have around 200 stores. Kama has 100 plus stores. We also plan to expand in our offline retail. That would also help the consumers believe in the brand more, that it's a luxury brand, the quality of the products, and that's how we will build that luxury and the feel to our brand.
So how many stores are you planning to launch?
This is something that we keep debating. We would like to launch between 30 to 50 stores in the next 3 years based on how the locations that we get, because we are starting to open stores more in the malls, and then we will be going to high streets.
Okay, so in the mall and high street, but Shubhika, the clean beauty space is getting crowded. So what makes RAS defensible against global luxury skincare brands also that are entering India? I spoke about, how Forest Essentials and Estee Lauder, there's been that kind of partnership. And when you talk about growth, do you not feel that this intensified competition is not going to impact your margins?
No, so when you compare our brand with, say, international beauty brands, one thing that we have which they don't is authenticity. So we can proudly say we are one of the only brands in India or maybe the world which has a farm-to-face approach, that is a vertically integrated approach, in which we don't just market our products like most brands do. We actually grow our ingredients in our farms. We have our own DSR-approved R&D lab in which we research on which ingredients, which actives and which botanicals would combine to give you, unparalleled efficacy of the product, because the consumer at the end of the day, they want results, right? So we are giving to our consumers botanical wisdom along with the, the new age actives to bring to them effective luxury and natural skincare. So that is our promise, which we are maintaining, which is unique to us. So even though there is competition, it actually helps us by kind of increasing the awareness, and then the consumer can make a call on what kind of brand would suit them. And talking about margins, the way that we are growing, it also helps us in our supply chain to now source ingredients or even the packaging material with higher MOQs. So it helps us to lower our prices. So I would tell you that we've been able to pass this benefit to our consumers. In the last 7 years, in one of our key products, we have actually not increased the prices so far, even though the price of one of our raw materials has increased by 5x. So we do pass on the benefit to the consumers.
Okay, but that farm-to-face mode of the company, that's an interesting proposition. And of course, you plan to continue with that. But Shubhika, as a company, are you profitable? Please help us understand and give us a sense of your financials.
If you talk about how are we profitable now, I would say yes, we are on that path. But if you look at the last financial year, at an overall level, we have not been, because of our excessive spends on brand building and marketing that does require a lot of efforts initially. And going forward, I see that our company can have really healthy EBITDAs in the higher teens of sorts.
Right. So what is the path to profitability going to look like? What are the timelines that you're essentially working with, especially to become profitable? While it's understandable completely to sort of invest in marketing, and which is why I think everybody would perhaps know, anybody who's interested in the space of beauty would know what your brand is all about. But what about profitability, Shubhika? What is the timeline that you're working with to achieve that?
So the timeline is this year, like the coming financial year, that is going to be a year where we would be profitable at an overall level, including it's already started now. And from a perspective of getting to higher teens, which I was mentioning, that would take 2 to 3 years to get to the higher teens in profitability. Because if you look at our company, it is still very, very digital focused, which also requires a lot of spends to be done for performance marketing, be it on D2C or the e-commerce channels. How do we think that we can sort of improve profitability would be through when we have scale. We would be able to have better people, but also reduce our, the CM4, which is the operating cost. We are also, if you see, we've been improving our gross margins, even though we are making products at the same or the highest or better quality, in fact, year on year. So that is from the contribution level one perspective.
Okay.
Then the major part is the marketing
Okay.
cost that we'll be looking at optimizing.
Okay. Absolutely. So optimization, as far as your marketing costs are concerned, that's going to come in. And this year is when you're looking at achieving profitability. But Shubhika, let's talk about the big trend of legacy FMCG companies like HUL, ITC and Marico, which have been increasingly investing in D2C startups amidst their increasing play in the digital first space. So what's really driving this trend from FMCGs? Why are they interested in D2C companies? Have they not been able to innovate fast enough?
So I think the change is happening at the consumer level. The consumer is changing fundamentally. So she reads labels, she questions ingredients, and builds loyalty to brands that are transparent and also value aligned. So large FMCG companies, they recognize that the next wave of beauty, it won't just be built on mass distribution alone, which they obviously have. It'll be built on trust, story, and ingredient integrity. So new age brands like RAS, we've built like genuine communities, credibility, and also, like you mentioned, really fast NPD that we're able to execute along with the clinical studies. That is what other structures that FMCG giants find it hard to replicate organically. So investing in companies like RAS, or even like acquiring companies like Minimalist or Forest Essentials or Just Herbs, it's a way of getting close to a consumer and a culture that they want to understand and serve.
Okay. Okay, Shubhika, but where does that leave legacy brands?
So if you have seen the market share or the growth rates of legacy brand, if the growth rates of legacy brands have actually been reducing. If a legacy brand was growing at a 10%, they are now growing at an 8% or a 6%, because brands like us are taking away a little bit from them, from their market share, by having our products which appeals to these consumers. So to be able to maintain that growth rate is why the legacy brands actually want to have companies like us.
Okay, and across India, like I spoke about the HUL Minimalist deal, Marico, Just Herbs, do you think that the future of beauty industry will actually be dependent upon these large FMCG companies building portfolios of indie brands rather than launching new brands themselves?
I do think so. That is what's going to happen, because even when these large FMCG brands, companies, they build brands, there is no guarantee that it's going to succeed. And the amount of time that they're going to spend to do that, it is going to be more cost effective for them, even if they're buying companies at thousands of crores, which have achieved that kind of scale, to be able to expand and ensure that they have such growth rates going.
All right, Shubhika, but what new markets or channels will open up for RAS because of this partnership that you have with Dabur?
I do think that from an international expansion perspective, because Dabur is present in 120 plus countries, that is something that we can really explore, which we haven't explored much as of now, because India itself is a big market. How do you optimize the entire supply chain is something that we are looking at, even improving ourselves. That is where we can benefit from them. Otherwise, we can even benefit from the quick commerce channels, which Dabur has a great sort of hold on. We can benefit from that as well.
Right. Shubhika, when we talk about, this minority stake purchase by Dabur, would you be looking at a complete acquisition by the company? Because this is something that many companies have actually done in the past.
So the investment by Dabur is from their investment arm. So it's not Dabur India Ltd that's invested. It is their investment arm, Dabur Ventures, that's invested like any other investor in our portfolio. Like how we have Unilever Ventures, that's just invested as a minority investor. It's not strategic in nature. The similar thing is with Dabur. It's not like a strategic investment from a perspective of acquisition, rather a financial investment from an investor who appears to be strategic.
Okay, that's an interesting clarification and an important one rather. But let me ask you one final question before we let you go. It's rather interesting that you started building this company in Raipur. It was not in Delhi, not in Mumbai, but in Raipur. And that really speaks volumes about the kind of spread of the Indian startup ecosystem. When did you think, Shubhika, that this moat of farm to face could become a serious business?
To be very honest with you, I never thought that this is going to be like, I always believed that we're going to be, but I did not like have timelines that by this year I will do this. I have always been very ambitious, but farm to face, we have had this sort of a tagline since 2017, and we have it trademarked hence. So we always believe that, the mode that we have of being lucky to have our own farms where we were doing farming, we could actually grow these ingredients, get the extracts in our R&D lab, and build something that actually consumers benefit from, right? Because skin is our largest organ, and health is wealth, and that is happiness. And that's what RAS stands for. It means essence and happiness.
Right. And Shubhika, one final question. What's coming up next, and what's the kind of growth that you're projecting for the company this year? And you have to give us numbers.
And we can't exactly give you all numbers, right? But I can give you some sort of hints.
You can give us ballpark. You can give us ballpark numbers, Shubhika.
I mean, earlier we used to grow almost, double or 3 times every year. But now with scale, growing at 2x or 3x every year is not possible. So we are trying to grow between 60 to 80% year on year. And what we are looking at growing from, because digital is our biggest channel. And if you look at the CAGRs of different channels, digital channel is growing the fastest. So we are definitely doubling down and going deeper in the digital channels like D2C, Nykaa, Amazon, quick commerce, and so on and so forth. While also expanding new opportunities like in the HoReCa, we are supplying to Oberoi groups in the spa, looking at getting into rooms of hotels in a large scale, looking at doing a lot of business in corporate gifting or retail, and new channels plus international expansion. These are the different channels that we will have to tap in, along with different products that we will be launching in the next 1 year that will help us unlock this disproportionate growth.
Right. So you have a lot of very interesting plans for the company, rather ambitious plans that you have for the company of international expansion. This is going to be an incredible moment for the company. But on that note, thank you very much, Shubhika, for sharing your thoughts and your insights, and of course, a roadmap for growth that you are anticipating. Thank you very much once again.
Thank you so much for having me here.
Ladies and gentlemen, on that note, it's time for us to slip into a very short commercial break, but lots more coming up on the other side. You don't go anywhere and stay tuned to Startup Central on ET Now.
Every business is